You know the ins and outs of it, and knowing the tax brackets and how they work can help you make better decisions.
Absolutely. We know our team gets a lot of questions about taxes, and it can be confusing to understand exactly how these tax brackets and tax rates will apply to you. So we're going to walk through a hypothetical situation for a couple who is married filing joint. Before we dive into their personal information, let's revisit the tax brackets. So currently, there are 7 different tax brackets in the U.S. tax system. You can see the tax rates vary from 10% all the way up to 37%. And then the size of each bracket varies wildly as well. Those are set by the IRS, so there's nothing you can do to make any one bracket any bigger than it is. So even though you may want all of your taxable income to be taxed at 10%, you're only going to be able to apply that rate to a portion of your taxable income. So now back to our couple. Again, married, filing jointly. They had gross income for the prior tax year of $150,000. The first step they get to do is to apply their standard deduction. So they get to take that $30,000, which is their standard deduction for married filing jointly for the prior tax year, and apply that to their gross income. This is going to take their gross income from $150,000 down to $120,000. Now, having that number identified, they get to start using those 7 tax brackets. So they're going to first go to the 10% tax bracket. That's going to apply to their first $23,850 of taxable income. That leaves them with just over $96,000 of additional taxable income to account for. The couple then gets to move over to the 12% tax bracket, which is going to apply to $73,100 of their taxable income. That leaves them with just over $23,000 of taxable income remaining. They then shift to that 22% tax bracket. That's going to cover the rest of their taxable income. And for this couple, this is what becomes their marginal tax rate, which really what that means is how far into the tax brackets did they get? You can see they got into that third bracket of 22%, but they didn't use all of that tax bracket. So if they were to have $1 more of additional income, their marginal tax rate of 22% is what would be applied to that additional income. So this couple has that marginal tax rate of 22%. Their marginal tax rate is different than their effective tax rate. To identify and calculate their effective tax rate, what we have to do is calculate their actual tax bill for each of the tax brackets that they had. So as we showed you, part of their taxable income was at 10%, some of it was at 12%, and some of it was at 22%. If we calculate their tax bill for each of those brackets, you can see those amounts listed here. We total each of their individual tax bills, and it comes out to their total federal tax bill of $16,228. This is how much the couple owes the IRS for their federal taxes for that prior year. To then calculate their effective tax rate, we take their total tax bill of just over $16,000, divide it by their gross income of $150,000, and that comes out to be 10.8%. So for this couple, effectively, they paid 10.8% taxes on their gross income of $150,000. So you can see their marginal tax rate is one figure, their effective tax rate is another figure. But a thing to point out, this couple did not pay 22% on all of their $150,000 of gross income. That was just their marginal tax rate. So it's important to understand these different aspects of the tax system to ensure that for each couple, they can be out there making the best tax decision each and every year for their tax situation.
And that's exactly why people want to understand how those tax brackets work, because even when you're working, having a working knowledge of the tax brackets can influence the decisions you make in your working career, but it can definitely influence the decisions you make when you're retired, whether it's using strategies like let's fill up your tax bracket, or should I convert this amount of money, or should I not convert, should I use a brokerage account within the overall tax plan. All of these things go into it. Having a basic understanding of how you come about your marginal tax bracket, your marginal tax rate versus effective, and how you use the tax brackets is all a part of that tax plan.
And Chawn, I know you recently just had this conversation with someone who was maybe thinking they shouldn't take a bonus at work because they were worried about the tax impact.
Yeah, this kind of information was exactly something that I did convey during a Retire Ready call that we had recently. Talked with an individual, the gentleman, he reached out asking about a bonus that he was going to get as part of work. And his mindset was of that marginal tax rate. He thought that that pulled all of his taxable income into that higher rate if he got this bonus, and took his taxable income from here up to here. So we just had to have the same exact conversation that we just talked about, letting him know that no, you're not going to be worse off by getting a bonus. I mean, any income that you receive is still, in almost all situations, going to be better off for you. So yeah, we had a really good conversation, and obviously that kind of information, he was able to make a better decision. Like most of us, we probably all will say yes to any of those bonuses. But again, that information was valuable for him and helped him make a better decision.
Yeah, not only because you say yes to the bonus, he had a better understanding of how it would impact his tax bill for that year. So that's just really valuable information you were able to get him in that Retire Ready call.
Yeah, that's something that the Retire Ready call is just wonderful like that, because for some people, they just have certain specific questions to their situation. Some people are just trying to learn more about our firm, what we do as retirement planners. But yeah, that was extremely valuable and helpful for that individual. So he felt more informed. He knew he was going to now go back to work and make that right decision. Thanks for watching. If you liked this video, click here for more great content from our team. Don't forget to subscribe to continue to receive helpful information for your retirement planning.